Welcome back to the deep dive. Our mission, as always, is pretty clear. Cut through the noise, pull out the key stuff from a whole stack of sources, and really give you that shortcut to understanding what actually matters. Today, we are plunging right into the very busy, always shifting world of crypto. We're going to dissect the landscape as it looks on September 11th, 2025. So get ready because, yeah, we're about to uncover some really fascinating currents.
Absolutely. It's an exceptionally dynamic picture our sources are painting today. You got this blend of everything, really global macro shifts, some pretty significant institutional moves, and the very latest in emerging tech trends. So, yeah, we'll be navigating both the undeniable opportunities, but also highlighting some critical areas where caution is definitely needed. We want to give you the full view.
Okay, let's jump right into the immediate market pulse then. Our sources show Bitcoin, BTC, it's kind of holding its ground, seeing a slight recovery hovering around the $111,000 mark. And Ethereum, ETH, that's showing some, pretty impressive relative strength, trading near $4,300. After what's been a really volatile stretch, what do you think is behind this gentle rebound?
Yeah, it's interesting. I don't think it's just a random bounce. It feels intricately linked to the broader economic picture. The U.S. Federal Reserve's decision back in late July at the FDE, keeping rates stable at 4.14 to 4.12%. That's really setting the tone for global risk appetite. And what's also quite intriguing is gold hitting that record high above $3,500 an ounce. It makes you ask, right, is Bitcoin truly cementing its role as like a digital safe haven, or are we seeing a broader rotation of capital into more traditional, maybe less risky assets? It's a key tension playing out right now.
That gold connection is, that's incredibly insightful. But let's pivot slightly because the sources are also detailing another major shift. Significant institutional capital pouring into Ethereum. We're talking big players, BitMine Immersion, the Ether Machine, Yunfeng Financial, they seem to be leading the charge. And it's not just direct investments either. You've got IPO plans from exchanges like Gemini. It all signals this broader growing institutional comfort with the Ethereum ecosystem, doesn't it? Is this influx maybe signaling a new phase for Ethereum, perhaps kind of distinct from Bitcoin's story?
Oh, absolutely. I think so. And this institutional push, it isn't just about the capital flowing in.
Yeah.
It's directly fueling these new technological directions. We're seeing the powerful emergence of real-world asset tokenization, RWA, happening on Ethereum. The Trusted Smart Chain, for example, just launched its mainnet specifically for RWA. That's a big deal. It's really bridging traditional finance with blockchain tech. But, as with all innovation, there's always a flip side, isn't there? We're also seeing European regulators starting to express concerns specifically about tokenized stocks. Just underscores that urgent need for clear legal frameworks to manage these new kinds of assets.
Right. So on one hand, this incredible RWA innovation, but it seems like there's always that shadow side to progress. Our sources are flagging these ongoing regulatory worries for tokenized stocks and also the persistent threat of scams in the DeFi, decentralized finance. How precarious is this kind of Wild West landscape for, broader adoption?
It's definitely a tightrope walk, that's for sure. But let's maybe zoom out again and look at the bigger picture of what's really driving the market right now. Central bank policies, they remain the biggest movers, I think. The FED's stable rates from July, that's one piece. Then you couple that with the European central banks meeting, the ECB happening today, September 11th, and the Russian central bank, the CBR, meeting tomorrow, September 12th. All these things are critically influencing global risk appetite. And the market seems to be actually pricing in potential FED rate cuts for September. If that happens, it could significantly boost risk-taking across the board, potentially flowing straight into crypto.
Yeah, and building on that point, the sheer impact of those institutional capital inflows, you just can't overstate it, can you? MicroStrategy keeps buying Bitcoin. That's a massive vote of confidence. And then, like you mentioned, those substantial investments in ETH from BitMine Immersion, the Ether Machine, Yunfeng. These aren't just, one-offs. They feel like really strong, bullish signals for both of the top assets that indicates a growing institutional belief in maybe their long-term value and utility.
Exactly. And that takes us right back to the RWA revolution, which I really can't emphasize enough. It's a crucial piece. What's fascinating here, the concrete examples coming through. Kraken, a major exchange, they're implementing tokenized equities on Ethereum. We're seeing tokenized gold being integrated into US IRAs, individual retirement accounts. And the Trusted Smart Chain's mainnet launch, like we mentioned, that's a huge step forward. This isn't just theory anymore. It's actually happening. It feels like a breakthrough technological and financial trend. And this is crucial, those warnings from European regulators about investor misunderstanding around tokenized stocks. They highlight that we must have clear regulatory guardrails. We need them in place for this revolution to really thrive safely.
Okay, so those are the really big drivers. Now, what about factors that are maybe medium importance but still shaping things? Our sources mention ongoing discussions in the U.S. Congress about crypto market structure laws. That's bound to define the industry's path, right? It's also interesting to see Singapore kind of blazing trails with its innovative regulatory approach, maybe moving faster than some Western counterparts, and the CFTC allowing foreign crypto firms to operate in the U.S. as foreign boards of trade. That seems like a positive sign for global operations.
On the flip side, though, you have these persistent concerns around security and, well, reliability. Recent incidents like the EIP 7702 phishing attack that targeted a new token standard on Ethereum, affecting WLFI, that's one example. Then you had the Starknet Layer 2 network error and the Bunny XYZ liquidity vulnerability. These aren't just headlines, They directly undermine investor trust in the DeFi space. It's a reminder that with cutting-edge tech comes the huge responsibility to build robust security.
Right. And it's easy to get sidetracked by some headlines, isn't it? Like the satirical Trump corruption coin proposed by Governor Newsom, or the dramatic volatility of a tiny project like WLFI. But what our sources really highlight is that for the big ones, for Bitcoin and Ethereum, these are largely just noise. They show us where the chatter is, maybe, but not necessarily where the capital is moving. And that's always the crucial distinction, isn't it?
Exactly. Those are often more about sentiment than actual substance for the major players.
So let's pivot then to the short-term impact. Thinking about the next, say, 24 to 48 hours, who kind of benefits from these currents and who might face some headwinds?
Okay, short term. For Bitcoin, well, while it's regained $111,000, which suggests a recovery effort, it's still a bit of a nuanced picture. What's noteworthy is that declining trading volume and those outflows from crypto futures, they suggest some lingering caution. And the fact that gold is sitting at a record high, over $3,500 an ounce, it does make you wonder if capital is actively seeking safer traditional assets. That could certainly influence Bitcoin's immediate path.
Right. But Ethereum, on the other hand, seems to be in maybe a stronger position. Our sources are attributing this to those massive institutional investments and also the deployment of tokenized equities on Ethereum by X stocks. Those are incredibly strong, bullish signals specifically for ETH. It suggests that, maybe Ethereum could sustain its recovery or hold support levels better than Bitcoin in the immediate future. Definitely one to watch closely.
And looking beyond the top two, at potential beneficiaries among altcoins, I'd probably highlight the broader Ethereum ecosystem first. That includes Layer 2s, RWA projects, DeFi platforms built on ETH. They're likely to see increased interest because of that RWA expansion we discussed. Then you have other smart contract platforms with strong RWA or enterprise applications. Avalanche, for instance, they're collaborating with Toyota Blockchain. And one analyst even predicts Solana, SOL, could hit $250 after its Alpenglow upgrade. Finally, maybe AI and Web3 tokens. Projects like Kite AI, which saw investment from PayPal Ventures, they could benefit from this growing convergence of AI and blockchain.
Okay, and conversely, which altcoins might be facing headwinds in the short term? Where do investors need to be particularly cautious?
Well, you'll definitely want to be careful with low liquidity, easily manipulated altcoins. The incidents we mentioned earlier, like EIP 7702 affecting WLFI or Benek XYZ's vulnerability, they really demonstrate the high risk lurking in less regulated corners of DeFi. This kind of thing could push investors towards more established, perhaps safer assets, and of course, meme coins. Despite any, short-term pumps you might see, they generally carry extreme volatility and just very high risk. It's a bit like playing musical chairs when the music could just stop at any second.
Okay, makes sense. Let's zoom out again then to the longer-term horizon, thinking weeks, maybe months ahead. What kind of major technological and regulatory shifts are these current events maybe setting in motion?
Looking longer term, the deep integration of real-world assets into blockchain that feels like a crucially important technological trend, particularly on Ethereum and other EVM-compatible platforms. And that includes BRC-20 for Bitcoin, which is fascinating, essentially bringing smart contract capabilities similar to Ethereum's onto the Bitcoin network. This isn't just a micro upgrade. I think it could unlock a huge new market for DeFi, attract significant institutional capital, and really fundamentally change how assets are managed. Another central area of innovation is definitely the combination of AI and blockchain, particularly in creating autonomous agents and more sophisticated market analysis tools. You even see the U.S. government using blockchain for economic data now. That's a powerful proof of concept for state-level adoption. And what's also interesting is just the continued maturity of the big ecosystems, ETH and BTC. Ethereum closing its whole SHKATH testnet, continuing upgrades, alongside BRC20's innovations for Bitcoin, these are all signs of really robust expansion and development.
That's a profound shift on the tech side. Now, turning to the regulatory landscape, what seems to be taking shape on that horizon?
Yeah, regulation is key. Regulatory clarity is paramount, really. The ongoing discussions in the U.S. Congress about those crypto market structure laws, they're very likely to lead eventually to a clearer legal framework for the whole industry. And that should significantly reduce uncertainty, which is always good for growth, right? It encourages greater institutional participation, leading to more sustainable expansion. What's also quite intriguing is the sort of regulatory competition we're seeing emerge. Singapore, for instance, seems to be innovating rapidly compared to maybe the West's slower pace on AI and crypto regulation. It suggests a potential race to attract blockchain businesses and investment. And lastly, we just can't ignore the geopolitical risks. Factors like President Trump's trade disputes, U.S.-China tensions around AI, sanctions against Russia, they continue to create macro instability. These factors could indirectly affect crypto, either by prompting it to act like a risk asset, or in certain contexts, maybe even a safe haven. It really depends on how events unfold.
Okay, let's really try to unpack this then. For someone listening, trying to keep a finger on the pulse, what are the most crucial indicators right now? Your kind of market compass, if you will?
All right, to navigate these waters, I'd recommend keeping a close eye on several key metrics. First up, the DXY, the US dollar index. This measures the dollar against other major currencies and is currently showing a recovery trend. Now, typically, a strong DXY pressures risk assets like crypto. It signals a flight to safety towards the US dollar. Conversely, if the DXY weakens, maybe due to Fed rate cut expectations, that could actually support crypto prices. So following the DXY helps you gauge that global macro risk sentiment. Next, ETF flows. These are absolutely critical as an indicator of institutional interest. Our sources highlighted that report. August ETF flows show the massive scale of BTC to ETH rotation. It clearly showed Ethereum gaining significant institutional attention. This data directly reveals where that big institutional money is moving, always a powerful signal. Then there's Bitcoin dominance. This metric measures Bitcoin's market cap relative to the whole crypto market. Right now, as we've discussed, Ethereum is attracting more institutional capital and performing better short-term.
So if BTC dominance continues to fall or just stagnate, it could signal a potential altcoin season, or maybe a broader capital reallocation across the market. On the other hand, if BTC dominance starts rising again, that could indicate a flight to safety within the crypto space itself, concentrating funds back into Bitcoin. And finally, on-chain metrics. These are just invaluable. Using tools from platforms like CryptoQuant or Glassnode can give you really deep insights into network activity. For instance, CoinDesk reported whales add nearly $960 worth of tokens for XRP, and also whales rotate to ETH. This helps you spot large accumulation or distribution trends. And sentiment data showing ETH supply on exchanges continues to go down, while price is still heading to $3,000. Well, ETH leaving exchanges is generally seen as a strong bullish signal. It indicates reduced selling pressure, maybe more long-term holding intent. It's like watching cargo ships leave the harbor. Fewer goods available means less potential supply hitting the market.
Okay, so putting all this information together, what does it actually mean for someone trying to navigate these markets right now? What are the kinds of scenarios we should maybe be preparing for in the coming days and weeks?
Right, based on what our sources suggest, we can probably sketch out a couple of possible scenarios. In scenario one, let's call it cautious recovery with ETH leading. Here, Bitcoin could hold above $110,000 and maybe test $112,000, $113,000, but it might struggle for a really strong breakout. This could be partly due to a lack of, truly groundbreaking macro catalysts right now, and maybe that persistent September red sentiment that sometimes affects markets. Ethereum, though, would likely continue to outperform Bitcoin in this scenario, staying around, say, $4,300 or $4,400, strongly supported by those institutional flows and the RWA DeFi developments we talked about. And altcoins linked to Ethereum, or those with strong RWA or AI applications, they could see some localized rallies. Then there's scenario two, retesting support levels. This presents a more challenging picture. If upcoming macro data, like the outcomes from today's ECB meeting or future U.S. economic reports, if they turn out unexpectedly negative, or if the DXY strongly rebounds, well, then Bitcoin can retest key support down at $107,000, maybe even lower, closer towards $100,000.
Ethereum might follow suit, but would likely hold its support levels better than Bitcoin. Again, probably thanks to those strong capital inflows cushioning it somewhat. But in this scenario, altcoins would generally face selling pressure and potentially see steeper declines across the board.
Okay, given those quite different potential paths, what's your best advice then for managing risk in this kind of environment?
Yeah, it's crucial to have a robust risk management strategy. And obviously, these are not specific buy or sell recommendations, just general principles. First, heightened vigilance is absolutely key. Stay alert to price volatility. Keep an eye on that macro news flow, specifically highlighting today's ECB decision and tomorrow's CBR meeting as potential volatility drivers. Second, portfolio diversification is usually wise. In a market where Bitcoin might be slipping, allocating to fundamentally strong assets or those with clear institutional backing like Ethereum could help mitigate some risk. And be particularly careful with, meme coins or those small high-risk projects with a history of scams. They're like the wild cards in the deck. Third, I'd say always consider using stop-loss orders. They can help protect your capital from unexpected, sharp price drops, especially in an uncertain market. Fourth, thorough research. It's just non-negotiable, really. Before investing in altcoins, especially any new RWA or DeFi projects, you absolutely need to do in-depth research. Look into their business model, check their smart contract security audits, know the development team. Avoid scams or hidden vulnerabilities.
And finally, on-chain data monitoring. It's incredibly useful. Use those tools from Glassnode or CryptoQuant to understand what the whales are doing, track exchange flows, get a feel for overall market sentiment. It helps make more data-driven decisions.
We have covered a lot today, but just looking ahead to tomorrow specifically, September 12th, what are the critical upcoming catalysts we should really be watching?
Okay, 3 events definitely stand out for tomorrow, September 12th. First, the Russian Central Bank meeting, the CBR. Now, while its direct global impact on crypto might be less than the Fed or the ECB, any monetary policy change from a major economy, especially given the current geopolitics, well, it can affect global risk sentiment and the ruble's strength. That can indirectly influence crypto flows. Plus, Russia has significant crypto mining activity, remember, so their economic policies can impact mining costs and profitability. My recommendation here is just monitor the Forex markets, particularly ruble pairs and general global risk sentiment. Tighter policy, like rate hikes, could pressure risk assets. Looser policy might support them. It's a kind of micro-level insight into how regional policies can ripple through. Second, we'll see the continued market reaction to the ECB decision from today, September 11th. The Eurozone's economic weight means the ECB's decisions have really widespread impact across global financial markets, including crypto. So hawkish stance think rate hikes, strong anti-inflation talk could cause euro volatility and negatively impact risk appetite.
Maybe driving funds to safe havens like gold or perhaps even Bitcoin, if it's seen that way. A dovish stance, conversely, could support risk assets. So closely follow the ECB reports, any comments, and definitely the reactions of European stock markets and the USD pairs. That gives insights into global market sentiment and potential capital shifts. And finally, keep an eye out for any U.S. crypto regulation news. With Congress back in session, actively discussing those market structure laws, any announcements or even just updates tomorrow could have a significant impact. Regulatory clarity, as we said, could be a positive long-term driver, attracting institutions, reducing legal risk. Conversely, harsh regulations or unexpected delays could create uncertainty. So my recommendation is just stay informed on U.S. legislative discussions and decisions. Policy news can cause sudden volatility, especially for altcoins related to specific targeted sectors like DeFi or stablecoins.
Okay, here's where it gets really interesting, I think. We've talked about the ebb and flow of the market, these big institutional shifts, the regulations slowly taking shape. But as you look at this whole evolving landscape, what's maybe one question that still sparks your curiosity, something that maybe keeps you thinking?
That's a great question. If we really connect this all back to the bigger picture, this growing tokenization of real-world assets, it's truly blurring the lines, isn't it, between traditional finance and the crypto world. And this raises, I think, a really important question for all of us. Will the future of global finance actually be defined by the full, seamless integration of these two worlds?
Good.
Or will persistent regulatory friction ultimately create maybe two separate, distinct financial systems operating in parallel? That's what I find myself wondering about.
Wow, that is a powerful thought to leave you with, and definitely something to chew on. Thank you so much for joining us on this deep dive today. Keep exploring, keep questioning, and absolutely stay informed because, the world of information is constantly revealing new discoveries. We'll catch you next time.